Coming up on Hard Fork, David Johnston. Meet the leaders in blockchain and the future of finance. This is Hard Fork.
All right. Welcome back, everybody. Episode 3 of Hard Fork with myself and co-host Lawrence Grinceri. Welcome back, Lawrence.
Oh, it's good to be back, Sean.
Excellent. And our third guest, David Johnston.
Thank you. It's good to be here, guys.
Yeah, so you were handed the baton by J.R. Willett, the inventor of the ICO, who was handed the baton by Scott Stornetter, the founding father of blockchain. So, look, it's a pleasure to have you along, David. You've got a long and illustrious career in this space, going back to, 2012, I believe.
Yep, I got involved pretty early. I was lucky to hear about Bitcoin from a friend. I think he turned to me and said, "Hey, Dave, did you hear Bitcoin hit $10?" And I said, "What's Bitcoin?" And sort of the rest is history. I went down the rabbit hole and ended up investing in a lot of the early projects in the ecosystem, including Mastercoin, of course.
Yep.
Back in August of 2013, I was running the Bit Angels at the time, the group that was investing in a lot of the early startups. And so, that worked out really well, and sort of went down that rabbit hole, ended up writing the paper on decentralized applications. And so most people know me for Dapps, or decentralized applications, is sort of my big contribution to the frameworks of the space. And, that kind of caught on, and it's been a crazy 7 years ever since.
Well, it has indeed. So, look, we're going to cover a number of topics tonight. But really, I know Lawrence is extremely keen to have a chat on digital securities. So, Lawrence, I'll throw it over to you for the first question.
Thanks, Sean. It's good to have you on, David. Welcome to Hard Fork. For Polymath's perspective, I mean, how are you seeing the adoption there, David? And what do you see, down the track for that platform?
It's been good. They've seen a lot of usage of the Token Studio, and they just recently did a revamp of the Token Studio. Polymath and security tokens are sort of the mainstream or enterprise entrance to the world of decentralized finance, in the way that retail today is more focused on lending and staking and just getting yield. Enterprise is much more interested in efficiency, like you said, settlement, using it for these different purposes. And so it's a very different entrance for enterprise, but I think that's what security tokens sort of represents. Yep. Is the ability for these enterprises to get involved in that whole trend.
Yep.
What sort of got me initially so excited about Polymath is they were going to put all into one place everything I needed to do a security token. But you have to remember 2017, it was like you try to do a security token, you had to find some lawyer who knew about it. You had to, get this, that, and the other. You didn't know how to make the smart contract, et cetera, et cetera. And so putting that all in one place, I've always thought about it like LegalZoom. What I love about LegalZoom is I can just go there, fill out a form, push some buttons, and I've got a company. I didn't have to find a lawyer, get an education about all these aspects, or find a registered agent. They just put it in a nice package, and there I go. And so that's why Polymath has seen the success it has with gaining users. I think they're a good chunk of the security tokens today because of that interface and simplicity that they've brought the market. Going forward, having their own blockchain, really being able to provide these capabilities to large enterprise, I think is key. And, I think we're going to see that continue to evolve. I mean, they've just got such a great international team of experts, and they always do a good job of pulling in the community. Like I remember virtually attending the 1400 sessions, right, that they held in Barbados, and they had pulled in people from all over the world that invented the ERC-20 and all these people in the community, and sort of try to get everybody to build it together. I've really come to an appreciation the last few years of collaboration. I've met a lot of entrepreneurs and been pitched by a lot of entrepreneurs, and there's some really smart people out there, but it's the super collaborators over time that end up doing the best. There's a reason Vitalik ended up in the position he is because through his writings, through taking a neutral approach, taking, sort of, a very less ego approach to how he was building and just inviting everybody in to the process to reward every developer who contributed to GitHub in the Genesis block. There's a reason they've got that developer ecosystem, and it's because they rewarded those people that put in that effort. And so I think the more you can do that type of collaboration, the more successful you're going to be. So it's really cool to see that in Polymath. And I think, we're just at these early days, and, it's going to be interesting to see this next run.
Since you've sort of been there at the, in the very early stages in the formation of what is effectively the deregulated market, the crypto market, what I also find quite interesting is you've, now as a director on Polymath, quite a well-known blockchain, really dealing in more the regulated side of the business, the digital security space. So you've sort of come, shall we say, full circle to a certain degree. How would you sort of, from that relationship between crypto and digital securities, I mean, how important do you think it is for the survival of the crypto world that the regulated part of the market, the financial services industry, adopts the blockchain as their platform for distributing digital securities and basically effectively moving, sort of the world economy to that extent onto the blockchain?
Well, I think it's important. I also think it's inevitable, right? At some point, after you have a immutable and auditable ledger, it sort of becomes negligent not to use it, right? So I think for auditing standards and so many things, in a few years, it's going to become a very basic presumption that you can audit what you're doing, that you have this type of triple entry accounting that distributed ledgers make possible, and so as that becomes more and more mainstream, I think that's what we're seeing with security tokens. It is the mainstream implementation of blockchain, especially for enterprise and groups that really haven't been able to participate, maybe because of legal concerns with the token aspects. This is really just a pure use of the underlying technology, right? They don't necessarily understand or sort of embrace the token economics and things like that, but they really like the benefits that it provides them on settlement, right? It really provides them finality at a speed they can't get from the, DTCC settlement layer, right? And so this fundamental advance, it's going to get used by every asset on the face of the earth. And I think what's important is sort of how it ends up getting used, right? We want it to still embody the ethics of open source, of public networks connected to private networks, right? I think there's space for both, but they really can benefit each other. So I'm imagining a future in which we have a lot of more interoperability than we do today of these public systems, these private systems, and these blockchains really connecting together and benefiting each other. So it's been cool to see these different waves of adoption, right? In 2013, it was just about payments. Like, people would get all excited when Reddit or Overstock would accept Bitcoin for the first time. And, as the payments hype kind of died down, the next wave was all about capital formation, right? That's what token sales is global capital formation for these new open source startups, right? And there was that mania there, and then that died down, right? And now I think we're entering effectively this third wave, right? Where it's security tokens, it's decentralized finance more broadly, sort of leading the way with these more mature use cases that, like you said, are putting the world's assets in the blockchain.
And you correctly stated that. I mean, there are a number of use cases where being able to, for example, exchange bonds over the blockchain in a peer-to-peer fashion, has a cost saving of 60% of what the normal fees are in the conventional world. Real-time settlement, as opposed to a 48-hour SWIFT exchange, provides the liquidity for the institutions to quickly then turn that over and there are significant benefits there when you really start to add that up across the whole,
Sure.
global financial services sector. So, I mean, why haven't we seen a stampede to date of the sort of mainstream institutions getting onto the blockchain and issuing? What's stopping them right now?
Well, I think really the challenges of the first were technological, right? You needed these systems to be ready to handle that level of complexity, right? At first, the token issuances were very, very simple. You look at ERC20 and it's it's an approach where it's really not built for non-fungible tokens, right? So then you had ERC 721. Polymath helped really forge the way with ERC 1400, right? Has been a big standard for sort of more complex token issuance. So you needed the technology stack itself to really adopt, sort of the abilities and identities that were required, right, for it to work at that level. And so, I think that's an aspect that, is really important. I've got my 5-year-old deciding to make an appearance. So let me pause for 1 second. This is where that editing can come in helpful. And I'll dispatch her and be back in 2 seconds. You say hi, Savannah? Yeah.
Hello.
Yeah,
we're not editing you out, Savannah. Was it Susanna or Savannah?
Savannah, yeah.
Savannah. So, Humans Capital, you guys are still sort of very active in the VC space, or?
I've got a family office and invested, all across the industry, really, security tokens, DeFi, all the different areas. So, I think I've made about 40 investments at this point. So it's
40.
It's kept me pretty busy. So.
Jeez. Okay. Anything in the DeFi space I should be having a look at?
I really like the intersection between stable coins and synthetic assets. There's a project I've been donating a lot to, the open source PegNet, which has all these pegged assets to different cryptos, different fiats, even has gold and silver.
Yep.
I think it's really interesting, and they've taken a pretty unique approach where it's fully decentralized. There's no team, there's no ICO. It's just open source, mining the decentralized oracles and converting between these assets. But they've seen about $4 billion move across their rails in the first few months of the system being live. And so, still a long way to go to get to those levels of the global economy, but it's coming. It's really coming together.
Yeah, it is. It is. It's it's funny, isn't it? You've been in the space since 2012. I'm getting just inundated now, or this sort of this new wave, almost sort of bypassing Bitcoin and wanting to actually understand what Bitcoin is, and they've gone bang straight to DeFi. So that's all they want to talk about with me.
Well, it's understandable, right? You've got this global situation where yields are really down, right? Banks don't pay people interest anymore, right? Yeah, mildly, yeah. And
mildly to zero.
yeah, exactly. And so,
well, apart from a artificially inflated equity market, that is.
Right. Everybody's expecting a correction. And so in the meantime, those 7 to 10% rates on DeFi seem pretty attractive all of a sudden. And so I think people are globally searching for yields and they're searching for alternatives. And they see the, money printer go burr, and they're starting to think about these things about, when it comes to how is money made? And, if it's just on a printer and they can make an infinite amount, does it really have value? Right.
Yeah.
I was seeing an article the other day, it's younger folks are obviously moving more towards crypto, and then you have the older generations piling into gold. We're seeing gold go to all-time highs, which I guess shouldn't be surprising when they're handing out helicopter money.
Yeah, I mean, I've been pleading with sort of friends and family, and I take a position in metals and in crypto. Obviously, we're obviously seeing the sort of influx of hedge funds now that that seem to be playing in the crypto space. It's where that sort of credibility level is there. I mean, on that note, where we took a bit of a pasting with all the thousands of ICOs that many would say never came to anything. Is there any sort of back from the dead project or something that you think's been bubbling away for a number of years that we should be having a look at?
Well, I think a lot of the biggest projects actually ended up delivering, right?
Yep.
You've seen a lot of projects go to mainnet recently or threatening to soon come to mainnet, whether it's Polkadot or,
that's one I'm hearing a lot of people talking about, huh?
Sure. Well, I mean, effectively, they're in a race, with Substrate, with the Cardanos of the world and the Cosmoses of the world for people that want to build on top of that tech stack, right? Yep. Effectively, you have 4 or 5 choices, and Ethereum gas prices are pretty high right now. So people are looking for alternatives, right? So it's Substrate and it's R3 Corda and, it's Cosmos and it's Polkadot, Polkadot's doing Substrate. And so you've got all these interesting options emerging, right? And these ecosystems forming around it. It seems to me, and I think the reason that, Polymath went towards, working with Substrate is, it really sort of a very robust framework, whereas something like a Cosmos is maybe easier to build, but not as robust. So it'd be interesting to see the specialization that emerges around, whether it's corporates and enterprise who've seen a big focus on private systems like R3 and Corda, or groups that are much more just, I just need this thing to scale and it's a simple token. Then I think they go for a Cosmos. So it'll be interesting to see as those really specialize, right? Because I really view these all as programming languages. Right. I mean, that's what they are at the end of the day, right? I don't get too tribal, because it would sort of be like if I stood on the hill and said only JavaScript can be used for anything, and it's like,
I know.
Well, I mean, it's a good language,
my protocol is better than your protocol, and I'll kill you for it.
If I'm building a backend for an exchange, I'm going to use C++ or Go or Rust or some low-level language. If I'm building a website, I'm going to use Node.js or some front-end, CSS framework, right? So there's specialization in software and in code, and that's okay. That's a sign of growth and maturity, not of sort of this fracturing of the ecosystem. So, I really am enjoying this Cambrian explosion of different projects and everything that's going on. So
after 219, which kind of felt like walking through treacle, especially with a crypto media outlet, it's like, oh my God, here we go. It's certainly back on big time. On that note, welcome back, Lawrence. You've missed Savannah gave us
Sean.
Her hot DeFi tips for 500x. You missed out on that. You'll have to watch the show.
Oh, well, I'll be sure to zero in.
Yes.
I mean, David, you brought out a very good point with regards to, the benefits that are achievable by issuing digital securities as opposed to the conventional securities. Examples of, production use cases today are showing that distribution of bonds, for example, is 60% below in fees doing it over the digital securities network than it would be through a conventional network. You mentioned a settlement, real-time settlement provides a significant advantage over having to wait, 48 hours to receive your funds, through the SWIFT network after basically selling off an asset. So I suppose given all of that, what's sort of holding back the industry? You would expect there to be a stampede. If there's one thing about the financial services industry is they like to make a dollar. So what's holding them back right now?
Well, I think at first it was really technical barriers, right? The tokenization on the blockchain was very, very simple at first. Back in the Mastercoin days, you could basically just issue a token. Ethereum came along. You end up with the ERC20 making it easier to issue a token. But it wasn't until Ethereum 721. Polymath worked a lot on Ethereum 1400, these sort of more advanced non-fungible token standards that you started to get all of the pieces that you needed. And this is part of why Polymath is building their own blockchain, right? Is frankly, you need a very different tool set to do all the compliance and all the aspects of securities than is easy to really natively do on Ethereum today. And so that's why they came to the conclusion they really needed their own blockchain that had sort of all these aspects of identity and things really built in as a native full citizen level, powers at the blockchain level, so that you could do the kind of compliance that was always going to be really difficult to do on a system not built for securities. So I think that's a great choice. I think, Trevor and Chris, the whole team there, have a lot of vision. And fortunately, they have, a really deep bench on the technical side. And they said, we're in a position to do this. As a lot of the other security token folks have really pivoted into being, services providers, right? We're going to be a broker. We're going to be this aspect. Polymath has really put a stake in the ground and said, no, we're going to provide that base tech layer, and we want to welcome anybody that's doing those services or doing those issuances onto our blockchain, right? So that's the vision with Polymesh, and that's the first table stake, right? That's the basic prerequisite, is you have to have the tech in order to unlock that. Now, even with sort of the complexity of doing today, we're really starting to see security tokens take off. I mean, I've been looking at the volumes and the value of security tokens issued, largely in Europe seems to be where the traction is today. And you're seeing a doubling almost every month from, 50 million in security tokens now, 100 million, 200 million. I think it's up to 400 or 500 million now in security tokens that have been issued. And so I think as this really gets going, it's going to snowball. But we're effectively still in those early days. I mean, Trevor Kavorko effectively invented the term security token in 2017. We're only a few years out of sort of even the idea of what we're into now, and we have global regulations emerging for this new term, and all the tech pieces coming together. So you needed the tech and you needed the legal, right? And that's the other part of the framework that we've seen emerge in Germany, in Switzerland, in Liechtenstein. They've done the hard work of actually putting down the regs, so that your tech meets those regs, and those two coming together, I think, is what unlocks this. But it's absolutely inevitable. There's not going to be a company in 20 years not using blockchain in some form or another for its audit functions, for its ability to move faster. I mean, how are you going to compete in a world which you can do this almost instantly if you were still taking 3 days, right?
Oh yeah, absolutely. And you mentioned earlier triple entry accounting, for example. I invested in an outfit called PayPy in 2017 that I thought it was quite highly intuitive to basically effectively you eliminate fraud. I mean, the WorldComs or the Enrons of this world would not be able to have pulled off what they did if you had a triple entry accounting system. Right. It's the ultimate verification. And I suppose if you couple that with a marketplace where now everything's on the blockchain, the exchanges, the accounting records, the payment receivables are all basically being tracked. You literally get a real-time audit as you see companies sort of grow and evolve. And we had JR on the previous episode, and we found that very fascinating, because really we're now entering a world where you could take your business idea effectively. And you could basically raise funds on as a digital certificate, and without having to get off that exchange, you can evolve that into the next Apple or Google. Right. I think as an entrepreneur, that is just a dream. And obviously the efficiencies, I think, is going to pay dividends. But when you talked about those digital securities, I mean, do you see any particular sectors where we hear a lot about property, There's a lot of blockchain already being used in the supply chains for commodities, for example. Trade finance is also quite popular. Is there any particular area that you're starting to see in terms of an asset class where the digital securities are starting to really start to come strong?
Well, I think lending is a really interesting one. And we certainly see this in the broader DeFi sense, right? Retail has been rushing into many of these different lending platforms, whether it's Celsius or Nexo or any of these offering staking or lending, have seen a huge increase in usage. I think DeFi for locked up Ethereum has crossed $4 billion in the last few days, right? So, and it was $1 billion at the end of the year, and then it took a little while to get to 2, and then 3, and then a week later it was 4, right? So it doesn't hurt when the price of Ethereum is going up either to reach those milestones. And so, I think we're going to see that reflected on the enterprise side. Bonds and lending, lends itself, pun intended, really well to this whole industry and technology, because you have a recurring source of payments. Like you said, you have all the transparency around the collateral and what's going on. I think we're honestly entering this sort of golden age of, more transparency, more honesty in business. I loved your point about sort of, you can't have the shenanigans of the past happen if this technology is implemented well. And that's a really important point. Like, we don't want another 2008. Like, a lot of that was because you had these black boxes, right? Called, securitized mortgages. And yeah, you could read the 500 pages, but you didn't really know what was inside, right? And it was re-securitized and repackaged and resold. And, they hadn't even finished, repackaging it from the last time, right? And this is why you had all these toxic mortgage was a euphemism for they didn't know who owned the asset. Right? I mean, literally, that's what the Fed spent the last decade doing, was trying to unwind those toxic assets. 2010, 2011, you had the mortgage scandals, right? Because they were robo-signing these things, right? And they'd go to court and 4 banks would show up thinking they owned the same loan, right? You had freezing of mortgage default processes all over the country. I mean, the system effectively went to a halt, right? So we can get out of those type of future scenarios with this technology properly implemented. And so it's an urgency, because we don't want that stuff building up again, right? And unfortunately, sort of the alternative is we've fallen into this world where the governments are playing a huge role today in the markets, right? You look at Fannie Mae and Freddie Mac, pre-crisis, they were 40, 50% of the market. Today, they're 90% of the buying on the secondary market. Like, they are if you took them out of the equation, the market, isn't there. And we're seeing the Fed step in with buying of bonds and all these things. That's not a healthy trend, right? And that's not sustainable. Everybody knows there's going to be a correction. You can't have a 30% contraction of the economy and the markets not follow, right? And they can drop helicopter money for a while, but we got to solve some of these fundamental problems to get out of these cycles.
Well, they've been dropping helicopter money since 2008. So when you say a while, I mean, it is quite incredible. You're sitting, I mean, we've been, out here in Singapore, similar, you mentioned, Liechtenstein and Switzerland, being quite advanced on a legal aspect in terms of, their central banks embracing sort of the whole blockchain world. And Singapore, similar, followed in suit. I always saw that as really the wealth management centers protecting their turf, sort of understanding that change is coming. We better make sure we're ready for it.
Sure.
We sort of saw the SEC sort of stumble around a bit. There was all sorts of comments coming out, of the White House about what they thought about crypto, and but very recently I was quite amazed, not so much amazed, but a little bit surprised, because all of a sudden, out of the blue, you get your Fed basically saying, "Hey, banks can now manage crypto for their customers." I mean, where did that come from, and what does that actually sort of mean from a financial service perspective in the US market?
Well, I mean, it's about time. Swiss and other jurisdictions have been allowing people, specifically financial institutions, to custody crypto for a while now. So it's nice to know that they can compete with the in the same game that everybody else has been playing, right? Now, honestly, they've been behind the eight ball since 2014, when the BIT license was passed in New York. That effectively set back the US by years, right? A lot of the early crypto startups were in New York, BitInstant and others. Everybody left New York, right? Maybe they went to California, maybe they went to Singapore. Vitalik ended up going to Switzerland, right? And so people had to find other jurisdictions. And so there's a very global competition. This is not a US dominated industry. I mean, I think the most telling thing is that a well-resourced corporate like Facebook has to go to Switzerland to get the legal and regulatory clarity they need to help set up a Libra association, because they can't do that in the US. Doesn't matter how much money they have, they can't pull that off in the US, right? And so, half the world's crypto projects, half the world's foundations, I think, are based in Crypto Valley, right, in Switzerland, largely in Zug and Zurich and Geneva. Liechtenstein is a great part of that because it gives you passporting into the rest of the EU, as they're a member of the European Economic Area. And so you could do licensing there. And it's just right down the road. You're talking an hour from Zurich, right? And so it's really interesting. And I've had to spend more and more time internationally. A lot of my travels to Singapore, to Switzerland, Germany, other jurisdictions, like we talked about, where security tokens taking off in the places that have already provided those regulations, in Germany and Switzerland. That's where those massive projects are coming online. And so I think the US is in a bit of a conundrum, right? Is they're clearly acting to, protect existing industries, right? Of which finance is a huge one. Like, the number one export of the US economy is dollars. That's number one. That is the biggest, that magic money machine, and the banking system behind it is the number one export, right? Ever since Bretton Woods and, Nixon taking us off the gold standard, somehow magically continuing the reserve currency even without a reserve. And, here we are, right? But it's also a reflection of the fact that there are these different fiefdoms in the US, right? You have the IRS treating it as property. You have, the Securities and Exchange Commission trying to figure out which ones are securities. You have the commodities folks determining which are commodities. You've got like 7 different federal agencies all claiming different definitions, often conflicting definitions of what crypto and these things are. And so it's going to take a while to unwind, but I expect we're going to see sort of a full loop, right? Whereas as people had to leave, the regulations got written elsewhere. Eventually the US is going to catch up. You've got jurisdictions like Wyoming and Delaware and New Hampshire, hopefully to see Texas in this next session. There's a lot of good movement there to build up blockchain laws just like they see in Wyoming. And that would be the first major US jurisdiction with a $2.5 trillion economy to embrace those rules. And eventually that pressure at the state level builds up, and you see that reflected at the federal level over time. So I'm hopeful that the US will get there eventually, but it's taken a while. And, it's been interesting because by all rights, this should be in Silicon Valley. This should be in New York. This should be in those traditional centers. But because of that conflict, it's unlike Internet 1.0, right? Internet 1.0 is all information disruption, right? And the newspapers and such didn't have, either the wherewithal or maybe the awareness that they were going to be massively disrupted. But now here we are at Internet 2.0. There's already an awareness that this is going to happen, and you're disrupting the largest thing in the world, money. It's literally half of every transaction, right? And so it's a much, much more important and bigger game than Internet 1.0, whereas, some newspapers went out of business, but we all got free information online, right? Moving value online it's a whole new game. So, it's going to be interesting to see how it plays out. I'm spending a lot of time in Europe. I've spent half the year in Switzerland. And, I love it there. It's beautiful country too. So, you gotta go where you can operate at the end of the day.
Yeah. Well, it definitely is a beautiful place, and the most amazing mountain scenery. I suppose I've never been to Denver, Colorado. I also heard it's quite magnificent as well. But do you see like China, for example, is coming up with the digital renminbi? What are your thoughts with regards to the Fed coming out with the digital USD?
Well, it is. It's called Libra, right? I mean, that's
but not regulated by the Fed, right? It's not.
Oh yeah, absolutely. It'll be regulated by the Fed. I put an article out this April in the middle of the pandemic madness. In 1 week in April, you had the Financial Stability Board, which is all the world's largest banks, announce how they were going to regulate global stablecoins. You had Libra 2.0 come out the next day saying how they had cut a deal with the regulators and how they were going to comply with all those regulations. They tossed out all the decentralized aspects. Libra is going to have, US dollar Libra, Libra dollars, Libra euros, right? They're getting rid of the baskets for the big reserve currency countries, right? Dollars, euros, Singaporean dollars, and euro and the pound, right, are all going to have their individualized countries. And then the same week, you had China announce the National Blockchain Committee and how they're going to regulate blockchain in China. So you had all the world's major governments and the world's largest companies all announce how they were going to roll out stablecoins. No one was paying attention, right? We're in the middle of, fleeing cities and, self-isolated and all ton of other things. But effectively, I published this paper about sort of the dual future of stablecoins that's coming, because we're going to have this bifurcation, right? These regulations are going to push out a lot of the existing stablecoin players. If you look at the FSB's rules, known validators, federally regulated, audits of reserves, like a lot of these guys aren't going to pass that muster, right? And you're going to be left with big resourced companies and groups like Libra. The USDCs of the world, they're a member of Libra, right? Coinbase and Circles, they're going to probably have to move their USDC to Libra blockchain in order to meet these compliance requirements. And then you're going to have the opposite end of the spectrum where it's fully decentralized stuff. We're talking a little bit about PegNet, but that's an example where there's no reserve, there's no collateral, there's no middleman, there's no company. The stablecoins are self-issued by the user. There's no counterparty involved. It's just in the protocol. So there's that example where it's going to be Bitcoin style, fully decentralized, and there's going to be a fully regulated side. That's what I see happening. This bifurcation is you're going to have nothing in the middle, just like ICOs, right? Either now you're a security or you're fully decentralized, but you can't be in the middle.
What are your thoughts on Tether's situation at the moment, David?
Untethered.
Yeah, I mean that's going to be difficult. I was there during those days. I funded Mastercoin.
Yeah,
and that was what Tether was built on, right? I hired Craig Sellers as the first CTO for the Mastercoin Foundation. Great guy, and they started with great intentions. Oh, we're going to do on-chain audits and all these other things. Another company bought it, and it sort of went in a different direction, and sort of has snowballed into this. Maybe it has a reserve, maybe it doesn't, right? We don't know. But more importantly, it's going to be difficult because of their centralized approach in order to adapt to this new world. Either they've got to become USDC and be fully regulated, right? Which maybe they'll go down that road. Or they've got to rip out the reserve and all of those centralized aspects and become fully decentralized. But I don't know what the path is for them to get there, but this isn't that far away. If you look at the FSB, they're talking about next year for these rules to go into effect, right? The initial guidance was open for public comment. That public comment, I think, closed July 15th. And so now we're already rolling into, the final guidance is going to come, and then the world's largest central banks will all start enforcing these guidances, this guidance on, their particular companies and people operating in their jurisdiction. So, it's funny to me that they've already told us what they're going to do, but either people aren't paying attention or they haven't sort of internalized it. Oh, I'll deal with that next year. But it takes time to adapt these systems. Tether is the most popular trading pair in the world now, right?
Yeah.
It's doing more volume a day than Bitcoin. People want fiat currency on a blockchain. They like the unit of account they're used to, plus the finality and settlement of a blockchain, right? It's a wonderful combination, but it's going to have a real shakeup as these rules get implemented.
Well, I mean, it's also a great safe harbor in a fairly volatile market as well.
Right.
But I sort of see, in some respects, Tether may, in the future be looked on as sort of the equivalent of what Napster was in the music industry. It certainly forged the ground and sort of popularized stable coins.
Yep.
But
to use that analogy, if you crush Napster, you get BitTorrent. And that's where we're headed. If you remove the Tethers of the world, that's where PegNet and other groups that are fully decentralized and have no central point of failure, that's where you're going to see their market share just explode. Yep.
And what do you, I think also when it comes to, moving the economy onto the blockchain, I think another thing that may not be as appreciated by those outside of the sort of the blockchain world and within the financial services side of it. But you don't need to issue all assets as now a new native digital security. I mean, there are projects where you can take, there's $150 trillion in third-party custodians today. You can move that ownership information onto the blockchain. And with that, along with the product information, it can still sit in custody, just like digital gold sits in a vault somewhere, or Tether theoretically has $3 billion of currency sitting in a vault somewhere. And the record of ownership is what's being changed on the blockchain. So it is quite possible to be able to see a landslide. There will be some point where we hit critical mass with regards to digital securities moving on to the blockchain, where all of a sudden I think you'll see a lot of assets held under custody all of a sudden now be reflected on distributed ledgers managed across the more popular blockchains out there.
Mm-hmm.
So it may be faster than what people appreciate with regards to the transition between what is the legacy conventional economy and the blockchain economy. It could happen as quickly as 5 years, definitely probably within 10. So I think, and I think there'll be significant benefits. I mean, it's hard to imagine that the fiat system is going to be able to survive with all the helicopter money that's being thrown around.
Certainly with a few extra zeros after it. Yeah, it's getting monetized pretty quickly. No, but I think that's a fair point. We've seen the industry come a long way as far as custody. Self-custody has gotten a lot easier. You've had the emergence of Ledger and Trezor and all these alternatives for keeping your own keys in a pretty easy way. It's a physical device, and people are getting used to that approach. And then you have, like you said, the centralized custody, whether it's BitGo or many of these other providers, are now holding billions and billions of dollars of digital assets. And they've become, really important, especially to the exchanges. Most of the exchanges on Alpha Point, for example, use BitGo, right, for their custody. And so, little by little, it's come a long way since those 2012 days where I printed a paper wallet and I downloaded a full node and I had to use a terminal to start the whole thing. It's gotten a lot better. And even in the last few years, we've seen improvements like insurance. You can finally get insured custody, not just insurance of the hot wallet, but the full amount, right? And so that's been a big stake in the ground. Okay, this stuff is insured, and that's a checkbox that you had to have for a lot of these big institutions to really play. And so, yeah, I think we're going to continue to see that evolve. And so it sort of begs the question: then what's the difference from the traditional legacy system, right? Because we've had custodians, we've had all these things. I think the real difference is we're getting into the world in which you have a lot more power of choice, right? You can choose your custodian. There isn't a single monolithic place where everything is settled. You can choose your blockchain. You can choose your providers, and you can opt out. Hey, this isn't working for me. The fees have become too high or whatever, and I'm going to, withdraw my capital and place it somewhere else, or maybe even self-custody, right? And so I think that choice and having sort of a voice and exit type option is really powerful, and it'll end up improving the systems. I think you might have asked during one of the breaks, it's interesting that the banks haven't moved faster, but then again, they've sort of got these captive audiences right now. It's like before you could take your phone number with you from the telco, right? But we know how that story ended, right? At the end of the day, people were like, no, my phone number is mine. Like I have to be able to take my data and move elsewhere, right? And so I think that'll be hugely for the benefit of people as we transition to those systems.
David, you're obviously an absolute pioneer in the space. One of the key investors that's really helped shape it and grow it. I'd love to hear your thoughts on Bitcoin specifically. How it's evolved. Do you think is it as you expected? And for you, what sort of role does it play in your portfolio and your thinking moving forward?
It's a great question. That's what got me into the industry, in 2012. Though I was lucky to have exposure to virtual currency before that. I don't know if you guys remember Second Life. They had the Linden dollar, right? 2006, right? And I built one of the first investment companies inside of Second Life in 2006, and sort of saw the rise and fall of all of that. And it was sort of regulatory constraints that really kept that from taking off in 2007 and 2007. And so when I saw Bitcoin in 2012, I was like, oh, this is a non-censorable. This is a neutral platform where applications can do compliance, not the protocol. Because anybody that tried to do global compliance at the protocol level just failed, right? Because you couldn't possibly comply with all these laws around the world at the protocol level. You needed a neutral protocol. It was just doing settlement. It was just passing money. And you had to have users and applications and companies like Coinbase do the local compliance, right? That was sort of the big stroke of genius, is to keep it open source, not owned by a company, not held by a foundation, but just an open source implementation was sort of brilliant. And I think, my view is, the closer you can get towards those ideals, the more elegant the systems tend to be, and the more it tends to succeed. Now, Bitcoin has certainly changed a lot over the years. In the early days, there was a lot of gold bugs, and there were a lot of people that were early internet entrepreneurs there, and they wanted to use it to pay for stuff, right? Is this real? Sort of that initial test was, well, can I buy stuff with it? Roger Ver set up the first e-commerce company that took Bitcoin. They had like 1 million products you could buy for Bitcoin, and that made it real for a lot of people, right? And then you had Reddit and Overstock and all these groups in 2013, 2014 that followed in. But over time, it really sort of changed. The narrative became more about hodling and digital gold and just hold it and never spend your Bitcoin. And that really caused a lot of friction, because there was sort of a part of the community that they just wanted digital gold. Like, forget all the other use cases and anything fancy, just give us super secure digital gold. And there was another part of the community that wanted to build smart contracts and scripting and tokens and all this stuff, right? And unfortunately, there was a lot of censorship that went on with the Bitcoin talk forums, with our Bitcoin, and they sort of came down on the side of the Bitcoin gold. And they said, no, you can't talk about this other stuff.
I have a lifetime ban on our Bitcoin.
Well, where it is
interviewing Craig Wright.
Oh my gosh, wear it as a badge of honor, because a lot of people have a lifetime ban on our Bitcoin for daring to speak about unspeakable subjects, right? Like expanding or scaling Bitcoin, which I find a bit ironic. So all of that led to the Civil War, right? And eventually you had the bifurcation with Bitcoin Cash. And, I think that was healthy. I wrote an article in 2016, Embrace the Coming Bitcoin Fork and our bright multi-Bitcoin future. Because they were effectively irreconcilable differences.
Mhm.
These guys wanted digital gold and these guys want digital cash. And that's okay in both cases, but they couldn't exist in the same project anymore.
I agree. Yeah.
Right. And so it's been so much better, so much less toxicity than in 2016, 2017, when you had those splits. And really what led to it was, what we saw with Ethereum, right? There was a split, there was a fork. It wasn't the end of the world. The project kept on growing. The people that wanted super immutability could do their thing. The people that wanted to sort of roll with the punches and aggressively build and hard fork could do their thing, right? That's good. That's choice. And so Bitcoin's really evolved over time. The choices that BTC has made are really around digital gold. And that's not as big as I thought it was going to be. I thought we were going for digital money and digital cash, which, M3 is $80 trillion and gold is $8 trillion. But hey, if they get half the world's gold market share, the BTC gets to 4 trillion, they'll do just fine, right? It's not to say these are bad choices, they're just different choices. And that's what I try to encourage is, instead of the tribalism, just be aware of the choices that you're making, because we're going to see that specialization continue. But I do think there's still a huge role for digital cash. And that is still up for grabs. Ethereum is doing what they're doing with smart contracts and all the DeFi stuff. But whether it's Bitcoin Cash or Dash or Monero or the new flock of zero knowledge proof related or Mimblewimble related privacy coins, whether it's Beam or Zcash, all these projects, there's going to be demand for that.
Yep.
Because, especially in this bifurcated world, there's going to be people who can't do KYC. They don't have an address. They don't have a government document. They don't have a home. How do you get that person on Libra? That person's not going to be allowed. They still have the financial inclusion language in the Libra paper, but it's sort of laughable at this point, right? There's no way they're going to both do the compliance and allow financial inclusion, right? Not under the current regulations. And so there has to be space. To this day, the most popular wallet in the world is blockchain.com. Because it doesn't require KYC, you can self-custody, you can set it up in a few minutes, and for 50 million people, that checks the box. So it's going to be interesting to see how it evolves.
Yeah, I mean, it's interesting when you talk about gold per se. I mean, it has a historical significance that's been built up over thousands of years, and it ultimately became something that was regarded as precious enough. And obviously, as a material, it didn't deteriorate because it's inert. And therefore, it made an excellent substance to base certain sort of economies, starting with some of the earlier Mesopotamian economies all the way through to, as you said, the gold standard being over in sort of the 1960s. What I think is interesting about Bitcoin is really it's only begun its history. So its relevance is going to be more about, in a future economy, one that's very much a digital, computer-driven, virtual type of world where we've created, shall we say, new landscape. I mean, if you think about the internet, really that was the creation of new real estate. The websites became effectively new real estate of value, where previously they didn't really have any value. It was created out of nothing, which is sort of the magic about, I suppose, humanity, right? We can build constructs because we're conceptual beings, and therefore out of those constructs we create new value. So within that context, I don't think Bitcoin's role has been fully realized at this point in time because the market's still maturing. But I personally see it and some of the other more leading cryptos as ultimately being sort of leading indicators about almost like indices about the growth of the importance of the blockchain itself to the global economy.
Right. Absolutely. And, that's a fair point. You're only 10 years into the history of Bitcoin, right? It's going to take a few thousand years to catch up with, gold on the historical aspects, but it has a lot of advantages that gold don't, right? Whether it's the divisibility down to 100 millionths, a Satoshi, whether it's the ability to send it instantly over the internet. They've gone a route where, fees are $1, So it's not going to be used instantly by the guy that makes $5 a day, but it's a great settlement layer. With that said, it's been interesting to see this recent trend of people putting Bitcoin on other platforms. Right, we're starting to see the addition of Bitcoin to Ethereum, and there's all these funny memes going around, where it's sort of like Bitcoin, super empowered, now on Ethereum, because because it's still the same scarcity, and they've gone with a set of choices where it's the conservativeness and the slow-moving nature of Bitcoin is seen as a positive. Like, we're just not going to break this thing. That's their entire thing at this point. It's like, we're not doing any more experiments. We're not going to break this thing. We're just going to slowly improve it.
I guess that camp feels, David, that's what gives it that commodity power.
Yeah. That's fine. That's cool.
Yeah.
If you wanted to build smart contracts, that's not the right platform. And that's why Vitalik spun out, right? I mean, his original proposals were to the Mastercoin Foundation to do scripting on Bitcoin. And the core developers were like, get the heck out of here. Not the Mastercoin core developers, but the Bitcoin core developers were not a fan of non-Bitcoin transactions. And, because their core concern is the integrity of the Bitcoin token, and they're just not trying to add other tokens or other complexities to the system. And so that's why all that energy moved to Ethereum.
Do you think banks are clearly going to rehypothecate BTC?
That's a fair question. They might take that approach. I mean, it'll be interesting to see when the first financial institutions start building Bitcoin or Ethereum positions into their treasury, right? And whether we see sort of this massive inflation sort of take off on the dollar side, there may be an evaluation of, well, do we go back to a gold standard? Do we use something like this, Bitcoin or Ethereum for a reserve? We're not quite there, but we're getting there. I mean, this is a $400 billion industry. I mean, it's hard to remember when I got in 2012, Bitcoin was $10 and there were 10 million Bitcoin in circulation. So all the crypto in the world was worth $100 million, right? And now we're at $400 billion industry. So it's not too big a leap at this point to imagine, as the industry gets into a few $1 trillion, that it's going to be seriously considered for those type of use cases, especially if the printing gets really, really out of hand. Yeah.
Now, my audience is going to absolutely slaughter me if I don't ask you this question. I mean, you've been one of the big investors in the space. You know it better than pretty much anyone we could have on here. Where, if you wanted to place firstly a conservative bet on something in the DeFi space, and a couple of roughies that you think are really worth having a closer look at. Could you give us some thoughts? I'm getting bombarded with different ideas from a million people at the moment, and so some of these are just outlandish projects. But I'd love to hear from you. Give us a couple that you think we should have a closer look at.
Sure. So not a financial advisor, so all the normal disclosures of do your own research. But it's been interesting. If you look at the FAT protocol hypothesis, you would buy ETH.
Yeah.
If you wanted to cash in on DeFi, ETH is appreciated more value than all of the Dapps on top of it combined.
Yeah.
Right? Because no matter who wins, the house wins because they had to have been using ETH in order to participate. So that's the conservative one. If you just want to bet on that trend, and I don't do any day trading, I'm about holding for 5 years because I don't know when the bear and the bull and all of that comes and goes. It's more like in 5 years, will more people be using this technology? Yes. Okay. Then I feel pretty comfortable that this is going to be reflected in the market value over time, right? So get some ETH. It'll be interesting when staking starts on ETH, right? I think it's 32 ETH you need in the current implementation. That's going to drive demand on top of all this DeFi stuff. So that's the conservative play. The more aggressive play is I would look at a lot of the DeFi protocols that are emerging, whether it's things like we've talked about PegNet and what's going on there. They've seen a doubling the last few weeks as they've gotten onto more exchanges in Europe. things like that, and more assets have been added to the network. You've got a bunch of lending and staking protocols. We saw the meteoric rise of Y-Earn the other week, which is effectively like a DeFi aggregator, and made it super simple for people to get exposure. So, I would just start looking at all of those things. I'd place small positions in those more aggressive and experimental networks, and really grow it over time. And then I've made 40 investments in the blockchain ecosystem. And so I tend to be pretty diversified because you don't know what's going to take off. My friend Bo Shen used to joke that projects he liked, he would put 5 Bitcoin in. Projects he didn't like, he'd put 2 Bitcoin in. And usually it was the projects he didn't like that ended up making his bigger returns. And so, if you've got the capital to really build a broad portfolio, some theories say it's hard to know exactly what's going to take off. Personally, I tend to go much deeper and only pick a few things that I know a lot about and really concentrate. So maybe more of a Buffett, 5-7 kind of thing basket. I don't want all my eggs in one basket, but I want, I want to be able to watch that one basket. So, but if you're more passive, then go for a broader strategy and buy some ETH, and you can ride the DeFi wave. But, don't try to become a day trader if that's not your expertise.
I learned that lesson in 2017, David. I won't be repeating it.
Oh man, so, it doesn't mean you can't hedge over time, but if it's tough, right? That's a very competitive world. For the rest of us, I had friends that traded all up and down from Bitcoin $10 to Bitcoin 10,000.
Yeah, and
I just sat there and held my Bitcoin, and I think I probably outperformed a lot of the guys that sold at 150 and bought at 70 and sold. So it's for the most part, there's a reason the whole HODL thing is popular. It's not bad advice. Buy for the long term, hold it as an investment, and go from there.
Yeah, and maybe a small percentage of fund money to trade with.
Sure.
Is maybe the way.
It's a good education as long as you know it's an education.
Exactly. Fantastic, Lawrence. Any questions?
Brilliant. Well, I'll definitely be closely monitoring your success, and it'd be maybe interesting to talk offline as well, and maybe see where we can do collaboration between what Skyhook's working on and what you guys are as well.
Cool.
Fantastic.
Excellent.
Great.
Now, the theme we've had in this show, David, just to finish off here, is you need to pass the baton on to somebody next.
Somebody equally worthy, David.
You don't have to mention too many names actually on the show, but offline, we'd love to have a chat with you. Just quickly on this note, though, who's impressing you most in this space, and who would you like to see on the next show?
There are so many great minds in this space. I have a deep respect for Gavin Andreessen and the work that he did in the early days of Bitcoin and continues to do on different protocols. Just working on the fundamental data science of making this stuff work. He really took the baton from Satoshi and made the project what it is today. So I tend to appreciate figures like that, figures like Roger Ver. He translated the white paper from Satoshi into Japanese. Jihan, translated it into Chinese. Those early figures. It's there's so many people have made those fundamental contributions. There's guys that have made those sacrifices along the way. Gavin, used to have a Bitcoin fountain that gave away 10,000 Bitcoin as part of just getting people to try it out, and that was nothing at the time, right? And so,
I'd absolutely love to have Gavin on. We've had Roger on in the past, not on this particular show, but on the channel. I really feel bad for Roger sometimes. The amount of flack he takes from people in this industry is just.
There's a lot of tribalism, but I remember what he's done.
Yeah, exactly.
I remember the things that he's contributed, the value and the time and the energy, and and I really respect his ethic. when it comes to voluntarism and sort of promoting voluntary systems as an alternative to the state, I think is really something in 100 years people will look back as visionary, as people move away from these monopolies that we've had historically, and now we have these open systems. And so, yeah, no, I agree. So, yeah, no, we'll talk about it more, but there's so many people that have done just huge things for the industry.
Well, anyway, listen, thank you so much for your time. It's been an absolute pleasure talking with you. Really enjoyed it. Lawrence, thanks for co-hosting once again. And
thanks, Sean. Always a pleasure, and it was great speaking with you, David. Very much enjoyed the discussion.
Yeah, excellent. We'll obviously have a chat offline, guys. See if you can help us out with the next guest. I'm sure Lawrence is eager to tell you a bit more about Skyhawk also, David. Thank you very much to the audience, and we hope you've enjoyed this chat. I'm sure you have. We'll see you back here next week for episode 4. Thanks, guys.